Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit homegain.com and click on the promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to homegain.com. Welcome back, Washington, D.C. Metro, to Real Estate Radio. I'm your host, Ryan Sloper, joined with my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder before we get started again is Real Estate Radio is designed to build the Washington, D.C. Metro's credit and housing markets by giving you good free advice. If you ever have any questions, concerns, whether it's real estate related, finance, credit, anything that you need, we can help you with. The phone number is 877-245-2030. And a quick reminder, that's an off-air number. So if you call that number, leave a message, and we will get back to you by the end of the day. That's 877-245-2030. So I want to dive into, when you guys are out there trying to shop for a mortgage, I've had a lot of people say, well, what's the best website to look at? What's the best indicators to be paying attention to figure out what to make sure that I'm getting the very best rate possible? The Freddie Mac just did their primary mortgage market survey for last week, and the 30-year fixed rate mortgage was averaging at 4%, which marks the second lowest reading since it hit a record of 3.94% in the October 6th survey, which was the lowest in history. Now, that 30-year fixed mortgage averaged 4% with an average of consumer paying 0.7 points for that loan. That 0.7 is a percentage of a point of the loan amount. So they actually paid 0.70% of the loan amount to obtain a 4% interest rate. Now, why that's kind of confusing, or it can really change from one person to the next, is everything depends upon your credit qualifications. How much money you're putting down on the property. What type of property is it? Is it a condo, a single family, a townhouse? Is a condo less than 4 stories, greater than 4 stories? There's so many different things there. And one of the first big pieces of advice or tips that I can give you is that you want to shop for loan consultants and not for rates. Because if you're working with a loan consultant that knows the market and knows what's going on a day-to-day, weekly basis, you're going to get the best rate. If you're just looking for rates, if you're just going online and you see 3% and is some sort of little teaser or trigger to get you to click on, and then it redirects to another screen and redirects to put your information in, then somebody has to contact you, chances are you're probably not going to get an accurate quote. What tends to happen, more times than not, if you're working with a loan consultant, they're going to make sure that they have to get all of your information, all of your pertinent information as far as, pulling your credit, getting the profile of the actual property, figuring out, looking at your income. And this income isn't just, the person on the phone saying, hey, I make $72,000 a year. They need to verify that. They need to verify that by W-2s. They need to verify that by tax returns. Louis, I can't tell you how many times that a person tells me they make $120,000, and
they don't make $120,000.
You get
right?
they get the tax returns and everything else, and all of a sudden it's 35. Okay, now in that person's mind, they make $120,000, but on paper, what the IRS is validating, they make $35,000. Now
that makes a huge difference in what type of loan they're going to get and at what rate.
And the biggest complaint I get from clients is that, well, they told me that I could do this loan. They told me that I could have 4% and I was like, well, did they gather all of your information? Well, I told them my information, and telling and giving the physical documentation are two different things. And that's probably the reason why almost 80% of the people that are quoted these extremely low rates that I think that there's no way in the world they can get them, end up coming back to me because I told them they weren't going to get that. And as soon as they received that documentation, they were like, oh, well, we can't give you 3.5 anymore. Now it's going to be 4.25.
Right, that's why you have to look at, and you're mentioning it from the point of view of mortgage rates online. The reason mortgage rates are online are to capture a lead. They're not really indicative of, they're kind of a general ballpark, but really you're not going to get the rate that you see there. You're going to get the rate that's individualized by your mortgage advisor.
Absolutely.
Similarly, it's the same thing with home value. I mean, HomeGain, we have a home valuation. That's just a starting point. It'll show you a range of what your house might be worth, but every house is different, and it's based on comparables, and the comparables may not be up to date. You may not have recent comparables. Your home may not be in good order. So just because you see something online 4% interest rate. My home was worth $380,000. Unfortunately, people take those numbers and they start to believe them, and it's very difficult until they get in front of a solid professional to tell them, here's the kind of interest rate you're going to get, and here's what really we can get for your house.
Absolutely. And
that's what people need to know, the difference between what they see online and then what actually is going to happen. And the only way they're going to know what's going to happen is to work with a mortgage professional like yourself or a qualified realtor real estate agent.
877-245-2030. That's 877-245-2030. If you're out there shopping for a mortgage now, I'd be glad to look at your individual situation. Like I said, putting all the pieces of the puzzle together and making sure that you're getting an accurate quote. A lot of people say, well, I was quoted 4% with no points. My next question is, do you have that in writing? Because
it's especially quoted to you with your name on it.
Absolutely. And because there's certain things with all the regulations that's passed in the lending world, you have to be able to have a property identified. You have to have the person's, name, social, date of birth, all these things before you can even give a quote. So if you don't have the property identified and you're just getting a quote out there, but you're trying to buy a property, that doesn't matter. I hate to say that, but it doesn't hold any weight as far as what rate you're eventually going to get. You can't lock in your rate until you identify the property. So you have to have a ratified contract. So it's great that you're out there shopping for a mortgage, but you're still looking for a house. You haven't found a house yet.
Ryan, don't they have to consider what points are involved and so on?
Yeah, and that's going to
cost of the loan.
Absolutely, and a big thing with that is, and I find a lot of people that are shopping mortgages online, they're filling out just general information. Then it goes to a person sitting at a computer where they just enter in the person's information. They're not really advising them anything. They're not asking the questions of how long do you plan on staying in the house? What is your long-term goal for this property? Are you going to turn this into an investment property down the road? You plan on selling the property? Because if you don't
do you need another loan to fix it up?
Absolutely. And you have to get the nitty-gritty details because, it could be the difference between costing you tens of thousands of dollars down the road because you could have maybe bought down that rate. You maybe could have spent more money up front knowing that your break-even point was 5 years. You know what I mean? And for me to not ask those questions and I might give a person a loan that wouldn't be suited for them. And a lot of online companies are just saying, okay, I can give you the very lowest rate possible, but not taking into consideration that the person plans on moving in the next 3 years, which you wouldn't want to have all those fees up front. You'd want to basically do more of a no-cost refinance where your interest rate would be a little bit higher, but you wouldn't have the fees there. And
I find it astonishing, Ryan, that people are going to spend or borrow hundreds of thousands of dollars and they think that it's as easy as going online and getting a quote and a house value.
Yeah, and it's so much more complicated, especially now. We just discussed that banks really don't. It's not really in their benefit right now to lend out loans at 4%. So, you're going to have to be overqualified most of the time to get the rates that are being quoted on the internet. And I'm talking, it could be a difference of 0.5% in interest rate from what you're seeing online to actually what you're going to get. If you don't have over a 740 score, which the majority of the population does not have over a 740 score.
And some people think they have a 740 score because that was the last time they checked it a year ago, and they don't anymore.
And you know what? That brings up a very interesting point. I've actually had people call me and say, Ryan, my credit score, I pulled it from Equifax Experian, and it's 750. Okay? Now, we all know that credit scoring is kind of a crazy thing. It's not very accurate. Well, when I actually take and pull it, it's different than if you pull it yourself. It's soft inquiry versus a hard inquiry. When I pull credit, it's a hard inquiry. I'm a consumer finance company, so it's rated differently. And when I pull it, that person that said they might have a 720, I might get a 680. That's a 40-point differential. I've seen as high as 60 to 80 points different than when the consumer pulls it.
Now, Ryan, I know that they've finally given people the comfort that if they check their own credit score, it's not going to impact their credit score. But I guess what you're saying is a hard check will impact the credit score, but they'll actually give you a better reading on what the actual credit score is?
Well, for all intents and purposes, if you're trying to obtain any sort of credit or a loan, the hard, that hard pull is the only thing that does matter. So the soft pull with the consumer just trying to check up on their credit really doesn't mean anything. Because
I used the soft pull to get my lease approved, but I guess they weren't that worried about it.
Yep.
And I just fax them a PDF of what I grabbed off the screen. But you're saying that my credit could have been lower or higher if I was really applying, because when you rent, you're not looking to take out hundreds of thousands of dollars; it's a couple of thousand a month.
Yep.
So they weren't that concerned about it. But I guess you're saying in the situation where you're taking out a loan, that hard pull is the only thing they're going to look at.
Yeah, and it's really hard for you, the consumer out there, because if you're telling me that you see one score, but then I'm telling you that it's 60 points difference, you almost don't want to believe me. It's like, no, I see my score, and I'm like, well, no,
right.
Let me tell you, your score is not what you're seeing on the soft credit report poll, and this happens quite a bit. I mean, I actually just had a case that was 80-point difference, 80 points. Now that person had in their mind the best credit possible. Unfortunately, I can't use their credit report for pricing.
And Ryan, what accounts for that wide swing in the difference between someone who thinks they have a 750 and they have a 680?
You know what? This is it's a great question that I've been trying to find out the answer. The problem is there's really not a good answer for it. It's luck of the draw. Some are higher and some are lower.
Or do you think it just has to do with people? I know that home valuation sites receive more visits when the price is going up. If the credit reporting companies are trying to get your money, they probably want to show you a higher score so you keep with the service, so that they show you a lower score. I don't know.
I would say that there's definitely some truth to that. I would say
feel good factor.
Exactly. Yep. It's better. Like if a person really had a 500, but you show them a 600, they feel better about them. Better about themselves.
$39 a month, they're willing to pay it again.
Yeah. Then they call me, and I'm like, unfortunately, the 500 is the real score that we have to use. When we come back, we're going to jump into the second component of shopping for a mortgage and to be successful doing that. When we come back, you're listening to Real Estate Radio.